Hello guys, welcome to the Train Parrot. 8.4 Bitcoin options just expired. What comes next after the volatility implied by this end of the month event? Today we have upcoming the core PCE price index, personal income and personal spending. And within this context, we just lost the 4-hour time frame. In today's video, I'm gonna discuss all these topics. We're gonna look deep into the data. This is the main Bitcoin video of the day. Let's get started. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. During this week, if you've been just focused on Bitcoin, you probably miss 3 videos that you can find going to my main page on YouTube, starting with an overall general markets overview, including dollar, gold, indexes, and some stocks. A couple of days ago, I also published a video explaining on PineScript how to import any external data and use it with indicators to do technical analysis. And yesterday I published a bot trading setup, not just any setup, but actually the one that has performed the best for me from the point of view of resilience. I was running it on Rune during all the controversy and it performed just perfect. To find the videos, just going to my main page on YouTube, go to videos, scroll down and you're gonna find them all there. Let's get started with retail. We can see that nothing has really changed this week. We remain at levels of 33. Looking at the news, nothing really stands out, particularly today. Yesterday, I didn't cover in the main video the Bitcoin options. For some reason, this month, I forgot to pay attention about that. Most of the time, when I scroll through Twitter, I find many people talking about the options expiring, and that's how I remember, but this month, no one was mentioning, and I forgot. The max pain level was 98k. They have already expired. That was roughly 2 hours ago. There were 8.4 billions at stake. After an expiration of options, investors can decide to take the cash and close the option or continuing to target higher prices, lower prices. So there can be a bunch of scenarios, but there are 2 scenarios that stand out at the moment. And we need to address the point that Bitcoin didn't go to the max pain of 98k, which by itself is bullish. We've been around 104, at least as of now, and I think holding around these prices sends the idea, or I speculate that there must have been some manipulation starting from yesterday when we reached right below that 107k that wanted to keep the price below there to reduce that distance against 98k. But now that the options have already expired, there's literally no motivation to even touch that price from the point of view of the options. And there is a lot of manipulation around options, particularly when you approach the date of the expiry. So holding 104 or remaining around that area, just taking care of small businesses, hitting some longs here and there, but still hanging around there, increases the chances that we can still go for the liquidation levels. The second scenario, which is a little bit more bearish, is if after the options have expired, some investors during today could decide to sell, causing some potential short-term selling pressure. And for that, we have to look into 103 and definitely the 100k psychological level. And since we have held so healthy, that could turn into a buying opportunity. Below 103k, for sure the shorts are going to start becoming more cocky, placing their positions, but we are approaching the weekend, therefore expect those swings to be less dramatic than during the week. It's worth saying that if we manage to break beyond 107k, taking the short-term liquidity, the chances that we go for 117, which is the target that we talked about on Saturday, pretty much triple. I am starting very slow to consider to write down my thoughts on Patreon. I have had Patreon for years. I always use it for trading bots, but I need a place where I can drop my thoughts. Let me know if this is something that you would like to receive in your email. Let me know if you would like this sort of information or possibly something different. We got the PCE incoming, personal income and personal spending, all of them with a forecast expected to increase, roughly around 1 point for each one of them. This is coming in just 3 hours, and it could spark a little bit of additional volatility now that the options have already expired. Now it's the turn for this to move the markets. We are 11% up in January. Let's focus on what matters at the moment, which is the breakdown on the 4 hour. 4 hour is a time frame that is always tricky. Let me go to this area in here. For example, if you place a line like this after a breakout, you can tell that the breakdown happens 16th of January, and still the RSI manages to put a new high. That is a new high for the price, and after pinching the PNR, the price continues to put a new high, but this time the RSI puts a low, an actual lower high, and at that point is where the price struggles to put new highs. This is a very typical behavior. What is a little bit atypical is after breaking down to have such an impulsive move right after. That is not very common. But it reminds us that it's still possible that we do something like this, getting into an RSI 4 hour of 70, tricking everybody with the breakdown. And that is what I want you guys to be aware in here, that it is possible. Because when I say there is a breakdown in this area, and I look at the liquidity, whenever I don't see much, neither in the short term or in the long term, right below the price, I always suspect bullish flag with continuation until proven wrong. So this adds some bearish points to where we are on the 4 hour, but it doesn't necessarily guarantee that downside. And that is because as well, the price action, you can see you have higher lows and higher highs in this whole structure. We just lost a bit of momentum, and that can happen as we approach the options, the PCE, and all of that. We are also entering in the weekend, so we need to keep track of how high we close the price on CME. We'll do that in a second. I think a test around 52 or even coming to the scene of the crime at 41, it is something that Bitcoin has previously recovered from. It is a bit more difficult to recover from breaking back below the range and getting into the bottom of the range too. That makes this whole thing look just as a confirmed fake out. So ideally, we hold the 104 or we go to RSI 40. RSI 40 at the moment is 101.9. And that magic number on price of Bitcoin has been extremely recurrent in here. And I'm going to do an analysis that includes the 23rd of January into what happened in here on 27th of January. Let's do it from scratch. You can tell in here that we are at 101.9. That is the bottom of the diamond pattern. We rally and close the price at 105. Okay, here you have 101.9. We rally and close at 105.2. You know, very similar. This part in here is very similar to this part in there. After that, we put a higher high at 106. In here, we put 105.7. $300 difference with a new higher high. After that, we left a wick to the upside and we came below the orange line. Wick to the upside, below the orange line. So we are here and we could see a bounce above the orange line getting into there. And here is where I'm going to take a copy of all this price action and I'm gonna place it in here, something like this. For some reason, it's not matching the tops, neither in the place where I copied from, but you can tell that this is the kind of fractal. That fractal points to 98K, which was the max pain. We didn't go there, and I'm not necessarily telling you that it's very likely that we do that, but the reason I want you to have awareness of that fractal is because traders tend to remember the short term, what happens recently, because they got burned, right? So they enter along in here and they got dumped into 97.7. So if they think this is just going to be another crappy rally that gets back into 106 just for me to get dumped 10K again after a move up to 105, I'm just gonna dump it. And what I want you to be prepared is that price in the short term tends not to repeat the same outcome twice in a row in a short period of time. That is something that has happened very rarely because people remember that and they are not going to give the option to people to get to 105 and let them short this thing 10k to the downside. That is kind of giving them a gift. Instead, price might get to 105, hinting a lower high in here, and loads of shorts are going to enter trying to get advantage of this. At this point, shorts were not really aware, they couldn't take advantage. Now they are prepared. Because they are prepared, they place their liquidity here. So what do we do as clever people that look into this data? We are not going to assume either scenario. We're going to look into the data later today. If we get into 105, ping me on Telegram, remind me if I forget to look into the short-term liquidity. And if by then the price is 105 and we see loads of shorts there, we could get a chance that this time, this explosion instead to the downside, it could be to the upside. I hope that makes sense. And in that case, we can see the RSI rallying into resistance on the 4-hour, and we could see the daily getting into 65. That is kind of my scenario that I want to handle. Remember, we are entering into the weekend, so if you are a beginner, please don't think that right after the video, everything needs to happen in the next 15 minutes, because some people do watch my videos and that's their expectation and they really get disappointed, which is pretty cute. Right, daily time frame. We got this range in here from 90.8 to 104.4 and we managed to close the daily above it. We left some long wick to the upside, which I don't like, but I do like closing beyond the top of the range. We are seeing this small correction back into the range, but it's early today. Fridays, we have seen some good performance as we close the week. I am pretty sure that the PCE results should have an impact on whether we can close today beyond 104.4 or below. In the update this morning, I was mentioning that I still have on the table the target of 65. I'm prepared to be wrong. We have support. Let's identify it. In the morning, I just gave you the RSIs. In the main video, I'm going to give you the prices, because I have more time to do it. So support from the white line is 54 and we got 51 around the yellow trend line in there. We need to rearrange this a little bit more. So maybe it's like, yeah, it's still 51 and 54. 65 is there and 35 is the bottom of the range. That is the worst case scenario for the daily. So let's put 51 in here. So support for the daily is between 103 and 101.8. So that magic number 101.9, which we have seen multiple times in here, 1, 2, 3 times, we could say 4, 5 as resistance, and then resistance in here. I mean, it's got a long history, that number slightly below 102 being something. And when we go to CME gaps, something is going to again appear at 102. Let's put on the 4-hour the 40. So a test of the scene of the crime on the 4-hour, it's also around 102. My God, so many times 102. I hope I'm wrong. Weekly at the moment is being held by the highest close on a weekly candle of 104.4. We are right there. It's not letting us so far close the week beyond that. And the shorts are extremely happy with the prospect of completing the M pattern in there and targeting 80k. The bulls are doing a great job so far, but now we are against weekly resistance. You can tell that resistance is there. It's 104 coming from the RSI. And it's nothing but this yellow line, which is the boss of the weekly for the full bull market. If there was one line that we need to pick across this whole 3-year period, it's just this one. This one is the boss. And it was the boss here, the boss there, there. And still today, we continue to go beyond it and below it. We live weeks constantly beyond that. This will be the 3rd week if we close below that we cannot overcome it. But there is a potential squeeze in here. So the longer you remain below resistance and that you continue to pinch above it, taking liquidity, there are 2 interpretations. Some people say if you see a strong rejection from that resistance now, that was a liquidity hand, a dead cat bounce. If we go beyond it, people are gonna say, well, all those pinches were exhausting the shorts. But for that, you need with every week to go a little bit higher. It's like stabbing them every time deeper, creating panic in them. The opposed to every week getting a lower, eventually showing that the bulls are exhausted instead. SOPR levels continue in areas where people are closing at a loss. And that, in my opinion, is more bullish than if we were at the moment closing in profits, because that marks tops and the previous one marks bottoms. The MACD yesterday didn't close as a bullish cross. We are still there in the process of deciding what's gonna be. We have at 102.1 a very skinny CME gap that I know many of you don't believe when it's too thin, but past performance tells me that they still matter. And that is another data point indicating that interest in going into 102. So here's the caveat. If we go to 102 during the weekend, do we really close the gap? Technically, price-wise, yes. But the main reason that you create a CME gap is because the CME, the Chicago Exchange, was closed. Therefore, orders placed there couldn't be executed. And that is one of the main reasons that, due to the elevated amount of trading in that exchange, creates a magnet for the price to go back there to eventually execute those orders. And since over the weekend, CME is gonna remain closed, if the price comes here, those orders still cannot get executed. It hasn't happened to me that over the weekend the price does this. It has never happened. And then on Monday we close it by going up. That's a little bit weird, and I don't recall ever seeing it. But I will say, if over the weekend we do this and then back up, I tend to think that the CME gap is still there and active. On the monthly chart, we continue to have this green engulfing candle. Today is 31st of January, so we should make a heroic effort to close beyond 108.3. Entering into February, February tends to have great performance. I show you this column a few days ago. You can see all the green, the average and the median is 15%. Not as much as October and November, but we could say is the third best month when it comes to returns. Big Well Explorer continues to be in the accumulation area at 0.31, which is bullish. Yesterday, finally, we have a big inflow on Bitcoin ETFs. We are about to put a new high, an actual all-time high in cumulative flows. And guys, we are in extreme greed for the first time today since a few days before. And you know what you need to do? We have a routine in this channel. If you watch this channel, you have to go prepare yourself 2 dark cups of coffee, drink them, down them, then look at yourself in the mirror and slap yourself 3 times. That is a must to remain a great trader. And the reason is because when we are in extreme greed, regardless of extreme greed remaining at high levels for very long, in practice, it never lasts too long. So these areas in here are extreme greed. We pinch it and come back down below 75, below 80. So at these levels are levels where we need to be looking for exits, not entries. And I'm not saying, and I repeat, not panic selling. Not because you enter extreme greed, you say, okay, ring the bell, close everything and run to the hills. No, but be a little bit more skeptic of news, data, breakouts, and all of these things. Always think that there is an expiry date that is just around the corner and plan your exit. If you are in extreme greed and you don't have any plan of exiting by now on any of your swings, you are doing it wrong. As simple as that. If you want to hold Bitcoin and you want to hold it for the long term and you're putting $10 every day for years, this doesn't apply, okay? If you're bullish for 2025 and you think that Bitcoin is going to top and you have a target of 150K, you are not a swing trader, daily trader, just ignore everything I say, okay? You just keep your thing in your cold storage, watch the video for fun and ignore the routine that applies if you are with leverage, for example, even 3x as of now in some coins and you're already in profit. Start defining what is your exit strategy. If you break which levels, you're going to take profits. If you don't, you're screwed, literally. And some bad news to add on top of that for awareness, data point, not decision data, but relevant still. We have a double bottom formation on the Federal Reserve balance sheet with a bottom of 3.09 trillion. We went back up to 3.34 trillion. That was an increase of almost 8% in their balance sheet in just in a matter of 2 weeks. Since then, they sold on 20th of January a microscopic amount, probably less than 1%, 0.30%. And we have a new candle and they have sold 3.6%, back to 3.22 trillion. So I can say this is not ideal, but not yet the end of the world. Because from here, from this bottom formation, what we should be looking into is a higher low. So if next week we get a higher high in here, we could be confirming the double bottom formation and just say, wow, the Federal Reserve is starting to get bullish on the market. And why do we care? Because everyone else does. Everyone else follows what the Fed does. S&P, Nasdaq, crypto, everything historically. There is some delay, sure, but this has an explanation, right? There is more liquidity coming in from them. The global M2 is still there in the double bottom formation, pretty much mimicking what the Fed is doing. I'm hoping that we don't get the similar thing in the upcoming weeks with a reduction in here, because that is going to put me in a situation that reminds me what happened in here with the global liquidity. What we want is instead is that double bottom formation to put a high like this. And then you get expansion in the market. November 2023 was awesome. We got all these injections, then we got more injections in here, and Bitcoin broke out to 108. So this moves up in global liquidity. Definitely grab Bitcoin by the hand and push it to new highs. So let's continue looking at that. I got this RSI in here connected to global liquidity, and it looks perfect for a breakout. If I connect it with the balance sheet of the Fed, we kind of get some sort of breakout, we could say, if you allow me for this slope and retest. So hopefully that balance sheet continues in this trajectory in a channel to the upside, injecting more liquidity into 2025 so we can finally have an altcoin season. Let's look at liquidity, order books, and all of that data as we normally do in the daily video. You can tell with this rally on the 15-minute chart how many times we did a pullback, bull flags all over the place, all shapes and forms, but each one of them has eventually pushed back up. Why is this one taking so long? Well, think about it. This starts from 3:30 yesterday and it goes low up until 4 a.m. At this point, we are 4 hours away from the expiration of the options. The time of the expiration was right there at the lows. And now we are going into PCE report. That's going to be around this candle. Let's leave a mark in there. So that is the time of the report of the PCE. Base case scenario is that we get a double bottom formation with a neck in the middle of the report, so we can see a reversal and we can push. Let's use the Fibonacci extension. With this Fibonacci extension starting from 101.4 that ends at 106, if that is the bottom, that can take us into 112. That's just the Fibonacci golden extension, not an exaggeration. But of course, if that is not the bottom, the lower we go, then that target gets dragged down as well, at least when we use Fibonacci in the analysis. On the longer term, we got this chunk of liquidity. You can see the magnitude in there at 108 to 109. Below the price, we still have the 96, 95 located in all this area. Both of them are small. I can tell you that the one below at the moment is a bit larger than the one that we have at 108. You can see this hill, compare it to that one there. But size is not all that matters, and that sounds a bit awkward, but you have 3.5K to the upside. distance is also important. We just need to move 3.5 to get there, whereas to the downside, we need to move 8.5. So there's an additional 5K that the market maker needs in terms of energy to get there. Can they do it? I think so. And that is because this lengthening here, you can project it from there and pretty much dumping from here, you can get there. Maybe if you place it there, maybe not, and you put a higher high. It all depends on how you personally calculate your own extensions. To be honest, I normally will calculate it from the top, so that wouldn't get us there just by using this extension there. And that's an extension of 1. If you do 1618, possibly. Liquidations in the past 24 hours have been really small, only 147 millions across all the coins in 24 hours. And overnight, we got to squeeze all the shorts. And you can see some alpha in here that I didn't catch yesterday. I wasn't looking at this chart during the day. Remember that there is a link to this chart in my website. You can even go to the tradingparrot.com/charts and find the whole list of all the charts that I'm using in every single video. Some of them require trading views, some of them other tools, and some of them require my own indicators. Many of them are completely free to copy, but not all of them. Being at the bottom here, we say that that is an alpha for topping, and that is because the longs pull out right there at 106. Okay, that's where they hit bottom. Now they're coming back. You can see in there that they're bouncing from support, which is positive. You can see that this bull flag that we've been talking about now, it's bringing some bidding, but it's not that big yet. Okay, so this one was enough for the reversal. That amount of 0.009 was good for this reversal. And now in here, we are kind of balanced. So I think that is because potentially they're waiting for the meeting later today to decide how they approach their trade. At the moment, we have 250K of delta affecting the longs, putting them still in a larger risk, just coming from these liquidation levels right here in the very short term. Let's have a look at fire charts because we are getting closer and closer to 110. That's where we have that selling wall that at the moment is $120 million. It used to be over 130 around here. When we got to 106, it seems to be reducing. You can see the animation there from 130 on the 29th of January. Then significantly reducing to 125, 26, 23, 21, and that's where we are. There's still also some selling below it, but it's just 52, 50, 36, and 17. Whales are just going sideways. There is no decision, nothing evident of which side they want to take. Normally we care about the purple ones because they tend to define direction, acting as a leading indicator. On the delta, we are having here kind of a bottoming formation, meaning that longs are coming back in. It depends really where we place this line. If we want to be absolutely correct, then we are still below that. If we place it like this, trying to connect with this pivot, we have broken out. It's a little bit confusing to use it as an alpha. I really prefer to get to these extremes, but all this range of the price, from the bottom up until the top, there were very little amount of longs, and the longs started coming in right there with this correction from 106 back to 104. And I really cannot tell you whether they're doing the right thing or not at the moment. I will have never entered on a long there. I add to my position last time at 98K. I did it publicly in a video. This could potentially indicate some more upside since we are exiting from the bottom. But since we didn't rock bottom there can still be another move down. So Delta, unfortunately, you are not helping either today. It used to be so good as an alpha. These are the liquidation levels from yesterday. 103.2 was the second largest. It was on the lower end, and the top one was at 106.4. I think we took that one from the past 30 days. Let's refresh. So yeah, that one is gone, and we still have the 103.2. So watch out for that one. at 102. We got plenty of Confluence, so let's keep an eye on this potential pullback. Price now needs to move literally to 109.5 to take our large liquidation to the upside, but we have this 103 very close to the price. This is just 30 days, so don't get confused with this chart that covers longer than that. And that's why we have this 107. One thing that I'm noticing is that we haven't really created a large short liquidation since 16th of December. And since February, according to Bitcoin seasonality, should be an up month, potentially we could see one of these red ones hitting my green line if February acts like a typical February. Fair value gaps is quiet as a cemetery in this area. There is nothing, and we have to go all the way to 95.9 really to take a decent fair value gap. Price has been moving, taking all the imbalances, giving us no idea of anything high likely close to the price, unfortunately. Guys, if you want to trade Bitcoin and altcoins using the top 2 best exchanges across the industry, we are talking about Bybit and OKX. They both have a very strong offer of products, tokens, all levels of leverage, hundreds of different coins. Indeed, the best option is if you're lucky to be able to have access to both. You can open an account using the links in the description and claim up to 60,000 in rewards on OKX and 30,000 on Bybit. By using those links, you're also reducing to the minimum the amount that you need to pay in trading fees. If you want to stay away from needing KYC, because it's such a hassle to go through all of that paperwork and sometimes not even being able to pass it, I've got 2 non-KYC exchanges, Bluffin and 2bit. Either of them are giving away amazing bonuses. Even a Rolex watch, an MacBook Pro, iPads, iPhone, Nintendo Switch, and 2bit is offering up to 30,000 in bonuses, this time based on trading volume and the size of your deposit. Whichever of the links that you're using down below is really helping the channel, so I do appreciate whenever I get a notification that someone has signed up with my link. Thanks for that. This definitely makes possible to continue doing this channel. I'll see you on the next one. Take care. Bye bye.